traders, welcome to a new video on trading tactics. This is going to be a video similar to videos I've made before with some strategies you can use for trading consolidation and some strategies you can use for trading trends. Today's video is going to be looking at market pressure and ways that you can scalp market pressure so that you can position yourself before a price breakout. Now, before we cover that, let me just show within 30 seconds to a minute, or maybe a little bit more, what I've covered in the past and how that applies to today's video. Typically with a trend, we find that it moves like this, with an uptrend. And a video that I made showed how to take advantage of these retracements. Now, what I call these retracements on the lowest time frame, such as 1 minute or even 1 second, is demand runs and supply runs. So we have a demand run and then we have a supply run. And if you believe that we're in an uptrend, then what you want to do is wait for a supply run. And then you get your order filled. If you don't get your order filled on that supply run, you wait for the demand run and then the next supply run. And that's how you can have the ability to trade during with the trend so that you can grow your position and profit. Same thing with the downtrend. If you want to short, it would look something like this. I know, badly drawn drawing, but then you would use one of these demand runs to try to get your order filled. Demand run comes, you get your limit sell order filled, and you can use a limit order, and you can also get your short filled at a better price than if you try to rush into that trend and short down there. So that's just a very basic strategy with trading a trend. Now, what I also talked about is a strategy that we have for trading consolidation. So here's a rough schematic of what consolidation looks like. Highs and lows, of course, and what I showed was how to use 2 limit orders to have a range-bound trading strategy. The first limit order goes at support, as you can see here, and then you put a second order right below support because that is, I'm gonna put that a little bit lower. You put your second order down here, and the reason we do that is one, to profit off of bounce of support, and then the second is if we do get a stop loss hunt, something like this that fills both of our orders, then we can profit from that stop loss hunt as well. So that kind of 2-tiered limit order there. And then we also do the same for resistance. We have an order at resistance, and we have an order for a stop loss hunt, or really just beyond that. And then we put our stop loss, just beyond these 2 orders, somewhere like down here. And then the other, stop loss would be somewhere up here. And the way that this can be quite profitable is that whenever one order, let's say the price keeps going up and it fills your, limit order here, then it fills your limit order here. Typically, your profit from when the market goes from here and then fills these 2 limit orders is going to be much greater than your loss if the market just keeps going up and hits your stop loss. So just to make sure you guys know exactly what I mean by that, imagine we get our limit buy orders filled, but our stop loss doesn't hit, and then price goes up and fills both this limit order and this limit order, which fully closes us out of our position. So we get to buy here with an average price of around there, and we get to sell here and then sell here with an average exit price of around there. Now that profit is typically going to be much greater than if we had this kind of scenario occur where both of these limit orders fill and then price goes down and hits our stop loss. We have a slight loss. All right, so that's just a quick thing of just 2 different kinds of tactics videos that I've showed before with scalping on lower time frames. Now today's video is going to be really a strategy that I've been using these past few weeks that has been working quite well, and I wanted to share that strategy with you guys. You can use this specific strategy that I'm going to mention in a trend. You can use it in consolidation. You can really use it in any kind of market stage or market cycle. Now, the crux of really what you're doing with this type of strategy is identifying strong points of resistance, strong points of support that have been tested multiple times, and then we look to target those levels. So what do I mean by that? Well, let me give just a quick example. Okay, we have $10,000 right here. This is a crudely drawn $10,000 level. Yeah, here. And this is price. Price is, 98.62, then it's 99.75 or whatever on XBT USD. It goes close, it goes back down, it goes a little bit closer, then it goes here. Maybe it touches it once, and then it goes back down, it touches it again. It's at this point in time that we're pretty confident of 2 things. One, there are probably a lot of stop losses in that area. Also, there's probably a lot of potential liquidations, meaning that if price breaches this area, it's probably going to, have a large wick or a lot of price discovery. Two, the second thing that we know about this is that typically when this kind of pattern occurs, what I've noticed after my 6 years of trading and 2 years in crypto is that typically these levels eventually break. So if you see a very strong point of resistance or a very strong point of support, what you tend to see in the market is repeated touches right before it, and then eventually you get one of two reactions that are very common. First reaction is this: we break and then we break below, like that. A kind of Bart Simpson pattern that we know all too well, where price has a stop loss hunt, then trends the other direction. And then the second thing that tends to occur is not a stop loss hunt, but price just continues going higher. Those are the two scenarios that would be good for this kind of strategy. And then the third scenario would be something like this that can occur. This is not always going to happen. I don't really see this happen much, but imagine this level does actually hold and price just goes down without tapping any liquidity. That can happen as well. But it's those first two scenarios that we're going to be focusing on today. All right, let's go to the XBT USD chart, and we have a beautiful example of something that may occur just there. Now, let me show some examples of exactly what I mean by this type of strategy on a very, very small time frame. So the first one I can actually see pretty clearly here. We do know what happens, but let's analyze this price action anyway. What do we see? Well, we see a low here, a low here, a low here, and a low here. What does this mean? Well, none of these lows have been breached, meaning that there's a lot of untapped liquidity just below this level. What we also know is that there's a psychological round price level at 10,100, meaning that we know we know two things. One, the stop losses just below this low have not been triggered, clearly. The stop losses below this low have not been triggered either. The stop losses below this low have not been triggered either. Additionally, we have the round price level of 10,100, and we know that there's likely a lot of stop losses, right below 10,100. So with all of this liquidity to the downside, it's probably going to be a good idea to target that liquidity for an exit, meaning that what we're trying to do is enter short during this phase of consolidation, and then we take profit either when this trends or either when we get a stop loss hunt and then a price move back upward. So let me show you guys exactly what I mean by that. So imagine that we short here. I short at 10,136. I'm targeting a break of these levels that are going to trigger a lot of liquidity because it looks like price is just waiting to hit those levels quite hard. You can see what happens first of all is we tap the first level of liquidity, we go back up, and then we really tap it. Now my maximum profit would have been from just here about 1.8%, but I could even choose to take profit now if I'm still holding my short, or I could wait for the market to retrace a bit lower. I could take my 0.47% profit, and that probably would have been a good idea because price does go back upward a bit. So that's one example of something that we can do, and the edge of that strategy, or the benefit really of that strategy, is that you have the ability to basically be targeting retail traders, or I wouldn't really even say targeting retail traders, I would just say targeting liquidity. Meaning that when you see repeated touches of a level, there's a lot of market pressure that's pushing against that level. And either you're going to see flat lows or rising lows, and you're either going to see flat highs or sloping down highs or falling highs. And what that tells me is that there's untapped liquidity and that there may be a large amount of market pressure to that side. So what I want to show you guys is what I mean by downward sloping lows within consolidation. This is not a pretty example at all. But it does show what I wanted to show. We have a high here. We have liquidity here that has not been tapped. We have a high here. We also have liquidity that has not been tapped there, and we have a high here that has not been tapped. What I mean by that is that anyone who shorted anywhere around here may be inclined to put their stop loss just above that high, or just above that high. Now, what ends up happening is if you had noticed that there's a lot of stop losses around here, and there's a potential, grab for liquidity, there's also the 10.8 round price level, which probably means, just by looking at this, that there's likely a lot of stop losses right above 10.8K. You could have entered long with a tightish stop loss and just basically banked on the fact that either price is going to move up and then move down into kind of stop loss hunt, and that's kind of what happened here, or price just moves up and retraces a bit and then price just, continues moving higher. And that's also actually kind of what happened here. Both scenarios did kind of end up happening. But that's what I am talking about with downward sloping highs, which means that liquidity has not been triggered yet. Stop losses and liquidations have not occurred yet at those price levels to hurt and hunt the shorts. This is another pretty good example. Downward sloping highs, and then boom, like that. It's all just hit. This kind of pattern where we have a lot of stop losses and liquidation potential right above here, and that's all tapped like that. And if you had entered long, that would have been a pretty good breakout trade. Now what I'm going to do is what I always like to do with these is to erase the 20/20 hindsight. And let's just scroll randomly, and I'm just going to randomly plop down a point and see if we can apply this kind of analysis in real time so that I'm not just, picking points. All right, guys, we have a consolidation range right here. Now, what do we see? Is more pressure being applied to the lows, or is more pressure being applied to the highs? If you believe that more pressure is being applied to the lows, then what I'm going to do is I'm going to look to enter a short here. If I believe that there's more market pressure being applied to the highs, then I'm going to look to enter a long here. Let's give ourselves just a little bit of more data. I don't want to give too much. I really don't want to give too much. Okay, I hope this doesn't break, because then, we can't really do anything. I mean, we could, but let's see if it breaks. It looks like there is a decent amount of pressure to the downside. Yeah, it broke. Okay. So hopefully you had said that, hey, this looks like there's a lot of pressure being applied to the lows. Maybe it wouldn't be a terrible idea to short anywhere around here. And had you done that, you would have picked up on that. But what we also see is downward sloping highs here. Boom, boom, boom. We have a lot of untapped liquidity to the upside. Now, what I want to wait for is I'm not interested with this strategy in entering long right away. That's not what I'm doing. What I want to wait for is for price to get closer to these highs, pull back, and then enter. Closer to the actual highs themselves. That strategy may seem counterintuitive. You may say, why not just enter long here and target that? But I believe it's based on probability that when price, touches this for the fourth time, and price does something like this, where price goes up, it touches these highs, and then it slightly pulls back. I just buying here just can be quite nice. Not buying resistance, but buying that fallback on resistance after like the fourth touch can be high probability that the market eventually is going to tap the liquidity to the upside. So let's see if the market can go a little bit higher, because if it does go a little bit higher, we can see more pressure being put on the highs, which means we can probably want to take a long position. But right now, we're not in any position. So if the market goes down, it doesn't even hurt us because we never went long. All right. And we can see a beautiful stop loss hunt that occurred right above 10.4K as the market wiped out liquidity. Any stop losses traders have put right above that psychological round price level. Makes sense. We also have 10,300 as another psychological round price level. We've gotten 2 touches near support there. We may see a break of 10,300. Yeah, we may see a break of 10,300. Let's see if that happens soon. And there you go. That's exactly what we're looking for right there on a very short time frame. I did not even expect the perfect example to come up, but it did. What do we see? Well, we see support. We see support, but it's hovering right above that 10,300 level. And I know for a fact there are a lot of stop losses below 10,300, and we get what? 1 touch of support, 2 touches of support, and then 3 touches of support. There's just so much pressure being put. Shorting anywhere around here is just going to probably work quite well. You may say, wait, Bennett. These are downward sloping lows, meaning that the liquidity is being tapped, meaning that the potential for the market to really go low is probably diminished a bit. Yeah, it is. I mean, I'd rather see these lows sloping up so that stop losses and liquidations haven't been hit yet. That would have been nice. That's not what we see here. But the good news of what we do see here is how much pressure was being applied to the limit orders around the 10,300 level. And even though there may be a large, this is the interesting kind of counterintuitive point. There may be a very strong bid or a very large limit buy. It could be $10 million at 10,300 on BitMEX, right? But if you see constant pressure being applied to that level, typically eventually that level falls. And what you can do is you can get in a pullback, try to target that like a sniper, target that level, that break, try to snipe people's stop losses and, liquidity grab, and then exit when you get this kind of thing happen. And you need to constantly have that pressure mindset of is more pressure being applied to the highs, is more pressure being applied to the lows, and then you can try to target a break of those highs or lows if you believe that enough pressure is being generated to tap the liquidity beyond those levels. I'm seeing a lot of downward sloping highs, so the market has potential. Not saying the market will, but the market does have potential to really, rise if it wanted to. Okay, what do you guys see? Where's more pressure being applied to? Let's go more locally around here. Okay, so we're getting closer to that low. Interesting. Now, the 10 point, let me just pause it here. Come on, go a little bit lower, please, and then we can pause it and talk. Are you going to go lower, dude? Or are you going to go higher? Okay, there we go. So the market just made its first progression low. So what we see is 1 touch of support, 2 touches of support. We also have the psychological price level of 10,200, which means that there's probably a lot of liquidity to the downside. So if I can see price putting more pressure on this low, and then if price bounces off that low, I would be more than happy to sell or to short, and then target a break of that level. Here we go. So we're getting a little bit more pressure at right above 10,200, and boom, like that, it drops. Now, if you had noticed this pressure, like I had just mentioned, 1 touch of support, 2 touches of support, 2 touches of support, 3 touches of support, right about here is when you can begin to think about limit shorting. Not at support. Not at support. You don't short at support. That's dumb. You don't short here. What you do is you see a touch of support, you see that pullback, then you can short on that pullback and target those levels. Now, you may think, you've talked about this a million times, right, Bennett, about targeting stop losses, trying to do this, but this video is focused on exiting in these liquidity pools, exiting when price goes beyond these significant price levels, like 10,300, 11,000, 10,400, or price low or price high, instead of entering. So what we're doing is we're entering during the phase before, and then we're exiting when it actually hits. And you can use this strategy in a trend or in consolidation, because you could get a kind of situation like this, where a price is trending, and then price begins to do this, maybe price has a stop loss on, price begins to do that, and there's just so much pressure being applied to those highs. You know for a fact that there are just so many stop losses above there. Then what you can do is you can see, hey, if there's a pullback off resistance, I enter, I just went long right there. Maybe price goes a little bit below, whatever, and then price taps all that liquidity to the upside and kills all the shorts. And we're happy, and they're not. That is something that can happen. And that is an example of what just happened here after so much pressure was put on support at this phase of consolidation. And we can kind of see a similar one here. We have resistance, 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 some pressure being put, and then that, price went above that. Let's see how much pressure we can put on the highs once more. If price does go back up a little bit higher, or if price goes lower, because we can target either side to break. All right, we have a liquidity pool just above 10,200 as well, meaning that there could be a stop loss hunt right above 10,200. Okay, we have another touch of resistance right there. A third touch of resistance, but this one is breaking a little bit of liquidity. I want to see price go down and then come back up. That would excite me more than what we have now. Okay, price did go down a little bit. Price can go a little bit lower, then come back up to resistance. That would make things interesting. Yeah, now this is more interesting. Let's see how much pressure can be put on support, or if price goes back up to resistance, we may be able to enter a position to try to target a breaker high of the lows, to try to exit on a trend or on a stop loss hunt move. Okay, this video is so long. My God, I expected this to be like 12 minutes, not like 20 something or whatever. I should have a timer just to tell me like, dude, stop talking, end the video, move on. But I don't have that timer yet. All right. So what we have is sloped up support, support here. A lot of untapped liquidity to the downside, meaning that if price does go down, price has the ability to go really, really far down. We have so much untapped liquidity, just so much here, if price goes down. All right, the highs were broken. So we had a lot of pressure being put on these highs, and eventually on that pullback would have been great to go long here and target a break of that high. All right, let's see what kind of pressure is being put on these highs and these lows. So we see a stop loss hunt. Price goes a little bit above there. Not much really happening here. Are we going to get a liquidity grab, then a trend? Liquidity grab and then a trend, or just a trend? Are we going to need another touch of resistance? Stop loss hunt at right above 10,500 maybe? Okay, a lot of pressure being put on support. Yeah, a lot of pressure being put on support. Okay, at this point in time, you may think, should we wait for a pullback and then short? Well, that would have worked out well. That would have worked out very well. Look, price breaks the low. When I said pullback and then short, you could have shorted anywhere around here. When I said the words pullback and then short, you short there, and price falls, 0.9%. And that would have been a nice profit. Because basically there was pressure mounting on the lows, you wait for pullback of those lows, and then you're able to take profit after price goes below those lows, or just hold if you believe that it's going to turn into a downtrend. This kind of strategy is just something I like to call I'd say, market pressure, or just, pressure on the highs and pressures on the lows. You can see it happened again here. We had more pressure being put on these lows, although we did have a bit of a stop loss hunt, and then that pressure broke and price went lower. All right, guys, that's going to be it for this video. Just to remember what we talked about, the crux of the strategy is to identify within a range. You get the range high, you have the range low. These are horribly drawn range high and range lows, and I am triggered. God, those are so... My artistry skills are just horrendous. All right. You see, range high, range low, and you see price bounces. If you see, more pressure being put on the highs where price, that was a bad example. Price is doing something like this, just constantly putting pressure on those highs, just constantly putting pressure, then trying to enter long on any of these pullbacks can work well when something like this happens. And I find that your profits tend to be much larger than your losses, because if enough pressure mounts, it's like a coil in a spring. It's coiling up, you wind it up, and then it pops up. And you take profit, and you're happy. And the shorts who had their stop losses hit are not. With that, happy trading. Email me any questions or PM me on Discord. See you, traders.